Have you ever wondered about the precipice upon which the global economy teeters? It's a question that keeps many wide awake at night, pondering the potential fallout of an economic downturn. Today, we delve into these concerns, guided by the insights of Michael Pento, president of Pento Portfolio Strategies. Pento warns of a volatile 2025, one riddled with significant market corrections, predicting potential 50% declines in stocks and 40% drops in home prices due to overvaluation. The spectre of stagflation looms large, sticky inflation coupled with slowing GDP growth, fueled by tariffs, labor shortages, and fiscal policies. The Atlanta Fed's forecast of a negative 1.5% GDP growth in the first quarter of 2025 signals an impending recession. This troubling outlook is further exacerbated by liquidity drying up and speculative asset bubbles, such as tech stocks and cryptocurrencies showing early signs of cracks. In this sea of uncertainty, valuation concerns emerge as a significant market risk. Pento observes that stocks are priced for perfection, with the S&P 500 at 22 times forward earnings, blissfully ignoring recessionary risks. Housing affordability too has hit record lows, with distressed sellers emerging. But the risks don't stop there. A liquidity crisis lurks in the shadows. Reverse repo facilities are draining, treasury reserves are shrinking, and credit spreads are beginning to widen, suggesting a looming liquidity squeeze. Pento's model flags 4 of 8 liquidity metrics as red, a glaring warning sign. Policy risks also pose a threat to market stability. Tariffs, potential government shutdowns, and unsustainable deficits, 6 trillion in a recession, loom large. The Fed faces a dilemma. Cutting rates could spike long-term yields, worsening inflation and solvency fears. In the face of these challenges, Pento's portfolio positioning is defensive. 20% net long equities in low beta sectors, gold, inflation hedges such as land and energy assets, and heavy cash and short-term treasuries. He prepares to pivot to cash, short-term treasuries, long USD, and shorts if credit spreads surge. Pento advocates for holding 5% of net worth in physical gold as a crisis hedge, plus tactical allocations to gold ETFs and miners. He stresses the need for active management over passive investing, given the elevated risks. Pento advises honesty about one's capacity to navigate volatility and suggests seeking professional guidance. Monitoring indicators like credit spreads, Fed balance sheet trends, and treasury yields are critical to timing market exits and re-entries. In conclusion, Pento anticipates a volatile 2025, urging vigilance and flexibility. While painful corrections could reset valuations, he cautions against expecting policymakers to allow a clean reset, favoring gold and proactive risk management instead. Economic outlooks may seem complex and intimidating, but with the right guidance and understanding, navigating these turbulent waters becomes a manageable task. Remember, knowledge is power, and in the world of finance, it's the key to surviving and thriving amidst uncertainty.